And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show.
Welcome to the show. This is Andy Webb with Lifestyles Unlimited. And as always, we're working on your financial freedom. And I want to open the show. I've just got a quick question or set of questions to start the show. How informed do you feel about the economy more broadly and more narrowly the real estate market right now? Do you know? Do you have any ideas? Probably heard some stuff, right, out in the news or whatever. How is the real estate market doing? Valid question for those that are listening to this program regularly that are investors, of course. And if you don't know, well, what is the best place to go to learn? And in particular, to learn about investor sentiment. How are other investors feeling right now? I like to know. So, hey, be sure to stick around. I'm going to be joined in a bit for a segment or two of the program by Mike Hanna. He is the owner of Investmark Mortgage. And Mike and his company, what they do is they provide hard money lending and 30-year financing to investors, both flippers and rental owners. They do both, and all across Texas. But what's important to me today is that they have conducted a survey of their investor base, and Mike's going to join us, and he's going to tell us, he's going to talk to us about the results, so we can hear how are the flippers feeling right now about the market. What about the landlords? That's what I do. That's what we do at Lifestyles Unlimited. We're not flippers. We are buy and hold investors, both of single family rental houses as well as multifamily apartments. So that's the question, right? Are people still investing? You hear a lot of doom and gloom out there. And if they are, well, what sort of headwinds are they encountering? So we're going to talk about that. Now, it does beg the question, of course, back to my earlier postulation there. How informed do you feel? Well, where do you go to get your information as a real estate investor, or maybe you just want to get started in this game? What is the best source? Well, there are a lot of sources out there. There are a lot. There is the information age, right? That's where we are. And there's a lot of information out there. Some of it's good, some of it's bad. Now, the source we'll have coming on here later to join us, that's a great source. Very close, very connected to the market, at least here in Texas. So what other places might you go? Nightly news. Very easy. Just flip the button on your remote, get the news flowing, maybe the 24-hour news going, headlines in the internet. I recently saw, as I was preparing, I was looking at some of the headlines out there. I saw forecasts for the real estate market. And of course, these forecasts, they tend to talk at the national level, which is really not relevant to me, who's buying right here in Dallas-Fort Worth. I don't really care what's happening in New Jersey or Topeka or wherever else. It's relevant to me here because all real estate is truly local. But I recently saw forecasts not for the rest of the year 2022, not for 2023, but for 2024. I mean, come on. My crystal ball's been broken for a very long time. I'm really interested how well theirs is functioning to look that far into the future. Disregard that stuff. Come on. Seriously. What about your family? You're sitting around the dinner table, your friends at the bar, wherever you go, the restaurant. Where are they going for their information? We'll see the prior discussion point, right? They're watching the news as well. So be very careful. You're going to get pounded with information. It's coming in all the time. Like I said, this is the information age, but it's not all necessarily good information. So you need to learn how to weigh that information as it comes in, because a lot of people operate from a point or from a place of fear. And a lot of that fear is stoked by what I was properly called misinformation from these very sources. Now, what are some good sources? Well, hey, if you're listening to me right now, you're listening to the radio show. Yeah, here you go. This is a good place. We are all real estate investors. If you listen to all the hosts, myself, Mike Harrison, Al Gordon, right? We all do the Real Estate Investor Radio Show. And of course, Del Walmsley does the Del Walmsley Radio Show. He is the founder and the CEO of Lifestyles Unlimited, and he has been investing for over 3 decades now. Talk about experience. Talk about really having a pulse on the market. That's the guy you want to listen to. And you're going to get a lot of information, and you'll get varied information from all of the hosts. And if you want to learn more, go to the podcast, really. If you're listening now to the radio program, great place to listen, but you can also go to our website, lifestylesunlimited.com, and click on that radio tab. What about me, Andy? Where do I go? Personally, I like to have a mix of sources. I like to weigh things. There is a lot of information, and there are a lot of opinions that are embedded in that information. So I will look at the national news, right? I'll take it with a big old grain of salt, but I do like to see what they're telling you. I like to understand what the message out there coming from the nightly news is, because sometimes those things need to be dispelled and broken down and taken apart. So I do watch that. I do listen from time to time. National groups, industry groups are hugely important, as well as local associations. I've mentioned time and again that we are, even though I'm a single-family investor largely, my wife and I are members of the Apartment Association here in Dallas. And those are all across the nation and in all the cities, all the MSAs. You can be a member as well. A lot of great information for your local level. National associations, realtors. I'm a realtor. I naturally listen to what they're talking about. Mortgage groups. So a lot of stuff out there. A lot of interesting forums out there as well. What we used to call back in the 80s maybe bulletin boards online and Facebook groups. Here too, I would be very careful with these. You don't know who is posting that speculation, that opinion, that feedback to whoever's question was posed on that particular forum. Be very careful. What I really like to go to is my local investor network. And of course, very important, our Lifestyles Unlimited ecosystem, very broad-based, includes my mentors, the Lifestyles Unlimited Realty team, the operations team for apartments, and of course, my fellow Lifestyles Unlimited investors. They understand what I'm doing. They understand what I want to know. Hugely important. And last but not least, big source of my intel is my team. We are now joined by Mike Hanna from Investmark Mortgage. And Mike, I've known you for quite a while. You've been part of the vendor program at Lifestyles Unlimited for over a decade now. So you guys have a very long track record with Lifestyles Unlimited, but obviously in the broader market as a hard money lender and also lending on the 30-year notes as well. And you conducted a survey, and this is what I really wanted to get into with you today. You conducted a survey to kind of gauge as I understood it, to gauge the sentiments of myself and my investor peers out in the market, I guess. Why don't you tell us a little bit about the survey? What was the goal, or what were you trying to learn, and who did you conduct that with?
Yeah, well, thanks for having me on. What we really wanted to do was get a pulse of what our investors and what the people in our network were thinking, about what was going on in the market right now. I mean, given that, we haven't seen any interest rate increases in a very long period of time. In fact, I mean, for most of the, new investors out there that, if you've been investing in the last, 10 years, all you've seen were, interest rates slowly going down, right, or remaining stable. But no one's seen the interest rates go the other direction. So we just wanted to get a pulse of what was going on with everyone's thoughts. And so that was the purpose of the survey. And
who are you surveying? What was your base there?
Well, it was mainly our mailing list. So our mailing list includes just, all of our investor network, along with our clients. So about 7,500 people is who we sent the survey to. And we got a good response on it. So.
Yeah, and I mentioned in the prior segment, it's not, so the listener right now is tuning into the Lifestyles Unlimited Real Estate Investor Radio Show. We talk about buying and holding, but I know you're not just working with buy and hold investors. You also loan to flippers. So you're getting you're getting the full gamut in there. You're getting both types of investors in that survey. What are the main takeaways? What did you learn? Are people still investing?
Yes. Yeah, they're still investing. I mean, our survey, I mean, the results really were that, 70% of investors are actively looking for investment properties. So that was, that's a pretty strong number. That's an indication that, they're still very bullish on the market. And then the other 30% was broken down to, 27% waiting for the market to improve, or, they're not currently planning on any, further investing at this time. And then, 3% said, they marked other, right? So they were indifferent about it. But that was what we saw. That was the big takeaway was that, people are still investing. They're still looking for deals. But, there's some challenges out there, right? And so we wanted to get what those were as well from the survey.
So what are those headwinds?
If you want me to.
Yeah, absolutely. I would like to know what other people, other investors, whether flipper or buy and hold investor, what are the headwinds? What are the challenges that they're encountering out there?
Sure. Yeah. So the number one, the number one takeaway from that was 54% of the investors said finding properties or getting outbid. That was their top challenge. And then the rest breaks down like this. You have 20% saying they had a hard time finding enough reserves or enough resources on their end to get into a loan or get into, to pay for the rehab for a property, whether that's, purchasing it, paying for the repairs, et cetera. So, having enough capital to do that, that was 20% of the respondents. 12% said they were having trouble with labor issues, labor shortages. And that, that's something that we've been seeing for a while now. We've seen that, if you've tried to do a rehab on a property, it's become very, very difficult to find certain trades. And then the trades that you do find, they've gone up they've gone significantly up in price. 8% of their respondents said that the supply cost was a big concern. So that's come down a little bit, but there's still, the cost of materials has gone up, right? And the delay in getting things like a dishwasher can take, 3 months to get a dishwasher in. Some of that stuff has improved, but 6 months ago it was not good, right? You get a rehab done and then you'd be waiting on like a couple of things before you could finish it. And then the final 6% voiced, raising property taxes as a challenge. So, those of us that are in the rental business, that significantly impacts our cash flow when the tax values keep going up. And we've seen that last couple of years, values have increased, and of course the assessed values have increased along with it. So that's putting a concern with at least some of the people that responded.
Yeah, and I've talked about that ad nauseum probably for the listener on the program, is protesting those taxes. In fact, Mike, you joined me. It's been a couple years. In fact, it was back in May of 2020. We talked about this very topic, a whole show dedicated to protesting taxes during COVID. This was the COVID era. That's one way to the listener. If you are a buy and hold investor and taxes are your concern, that is one way to address that particular piece. So I understand that. I guess the recent inflation read is that it's declined just a little bit. To your point, maybe we'll start to see some of those prices come down. I don't know, Mike. I feel like some of this stuff is embedded now, both with our, the goods going into the properties as well as the true price of the property. So some true headwinds there. But I think maybe I'm a silver lining sort of guy. The fact that 70% of your network, of your polled investors are actively looking, I think that's great news, isn't it?
Yeah, absolutely it is. I think, if you look at what's going on here, especially so we're a Texas lender, right? We don't loan out of state. We know the market here in Texas. And so we track all the data of what's going on here. If you look at just the economics of it, like the average, the sales price, the average sales price year over year from 2020 to 2021 went from $411,000 to $482,000. The median price, that's up 17%. Median price rose almost 23% to $399 as the median sales price. Then there's a bunch of other statistics, like months of inventory declined from 0.9 months to 0.7 months, so less than a month. Where in a normal market it's 6 months, right? So we're seeing a little bit of an increase in that now. This is data from 6 months ago, but we have an unemployment rate here in Texas of 3.4%. We have a lot of other data here that indicates that, just like nationally, we have a supply problem. We have a big supply problem here, and demand has definitely outstripped supply in North Texas. So we've gone through this huge cycle where, we have, over 1,500 people move here every day to Texas.
Yeah, you're talking fundamentals that are supporting the market specifically here in Texas. We're going to head into a quick break. Let's pick this up, Mike, on the backside if you can stick around. Thank you.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
You allowed 15,000 members into your sandbox.
Thank you.
And so that speaks volumes. So for that, and as a family.
So you know why I did that? Everybody always asks, why did you do this? Because I was an ugly kid. My parents used to have to put a pork chop around my neck so the dog would play with me. And so I always wanted to have friends, and I figured if I could make people rich, they might be my friend.
Join Dell and his successful friends. Start with the free online workshop. Register at lifestylesunlimitedworkshop.com.
Welcome back to the show. I'm your host, Andy Webb, and I have Mike Hanna from Investmark Mortgage on with me today. He just joined us in the prior segment. They had conducted a survey. We talked a little bit about the results of that survey in the prior segment. If you missed any part of the show, go to lifestylesunlimited.com. You can catch that content there. Mike, as we were heading into the break, you were talking essentially about the fundamentals here in Texas, the lack of inventory in the housing market, and the fact that so many people, I think you said 1,500 people moving here a day to the state of Texas. I mean, crazy numbers. That's going to have an impact going forward. But I want to go back. I want to go back to the headwinds or the challenges part. We talked about what those are, what investors are seeing. And I have kind of a broad question to you. How do we as investors, what do we do to take on those challenges, to address those headwinds? What do you recommend?
Right. Well, let's just cover each one of these. But the main point I want to mention is you've got to be patient, right? So, if 54% of the survey results came back with, "Hey, we're getting outbid." That's our top challenge: finding deals and getting outbid. You got to be patient. If you don't get that deal, don't spend too much time on a deal where the numbers don't make sense, right? Just move on to the next deal. While you're doing that, you need to be building out your network, right? By building out your network means who are you associating with? Who is helping you find deals, right? You can't have enough friends in this business, right, or people in your network. With the labor shortage issue, you got to have a prime contractor and a couple of backups, right? Almost for every trade if you're going to GC the project yourself. So those are things that I think investors need to do is don't get discouraged. You got to make more offers, right? You've got to stay with it, when times are good, and when times are a little bit more challenging to find deals. So that's what I would say is the thing to focus on.
Yeah, a team is hugely important, and it's interesting. You probably don't see these, I don't imagine, but as a Lifestyles member, I have email blasts that I get from the realty team, and I'll tell you, those seem to be increasing in frequency now. To the problem of inventory, I do think that's shifting a little bit, but it's a valid point. Know your investing criteria. What kind of return do I need to see? Cash out of pocket do I want to have, et cetera, et cetera. And stick to that. When people deviate is when they tend to find themselves in hot water. Now, your client base, Mike, it's a little bit broader than what we do at Lifestyles Unlimited. Like I said, we're focused on the rental side of things, but you also lend to flippers, and there's some interesting numbers that came out of the survey. It seems like flippers are holding back quite a bit more than the rental investors, despite those higher interest rates you just mentioned. What does that tell? What can you glean from the data and tell us about the two investing models? What are you seeing as a result of the surveys in the market?
Yeah, those results are pretty interesting. The flippers, even though everybody is still bullish on the market, 49% said they felt good about the market. 51% said they had concerns and were holding off. And those concerns relate to, hey, the market has gone up the last couple of years, significantly. We've seen these huge jumps that really haven't seen that in Texas, ever, I don't think. We've never seen these, especially in terms of the percentage increase in values. So I think there's some concern that, hey, if interest rates are going up, it's going to put some pressure on pricing and on values. And I don't want to buy something right now, and maybe, if I go try to flip it, it's worth a little bit less, right? So I think that's the mindset, at least to some of the investors that we've spoken with. So that's and when I look at our system, I ran a report to see how many of our clients right now are flipping versus how many are renting, and it's way more rental. It's 75% are buy and hold versus 25% flipping, where a couple of years ago it was more 50-50, maybe 45-55, somewhere in that range. So it's definitely more rental oriented now, even though interest rates have gone up. It's just, I think there's some concern about spreads on profits if you're trying to flip.
Yeah, it's interesting. I was speaking with a very experienced investor that has his hands in a lot of different pies, and he sources his own properties. He was telling me, Andy, the quick, easy money is to just assign the contract, sell that to another investor. But that's very low margin, low returns. Above that, maybe we go ahead and close on it, do it, just paint and carpet real quick, wholesale, it's called, just put it back on the market without fully fixing it up. He said after that, in terms of returns, doing the flip, we're going to make more. But he said ultimately I want to get to where I'm holding on to these things, because over the long term, that's where the profits are really going to be. And I think we're seeing that right now. The challenges that flippers are encountering, they're being straightforward with you, and they're holding back more than rental investors. 70% of people are investing, actively looking. Again, good news. What do you see? We were talking a little bit ahead of the break about the Texas market. Is there anything else, anything you want to talk to about the fundamentals here in our great state? Where do you guys lend, by the way? Where are you? I know you're here in Dallas-Fort Worth like I am. Where in Texas are you guys active?
Well, we lend all over the state of Texas. So if it's in Texas, we lend on it. And I mean, in terms of fundamentals, is that what you wanted me to
Yeah, we're starting to talk about that ahead of the break. The music interrupted us, the commercial break, all those good interruptions came in. I'd like you to finish your thoughts on just Texas as a market and what we see going forward.
Sure. Okay. So here's a little list of things that you can, that the audience can, take in and interpret how they want to interpret. We've got over 10% of the Fortune 500 are here in Texas. Last year, 150 companies moved to Texas. So in 2021, 150 companies moved here. That was almost 700,000 jobs were added to Texas in 2021. And for 20 straight years, Texas is the number one exporter in the country. A lot of people may not know that, but I thought that was a very interesting stat. And Texas is the ninth largest economy in the world, with the population in North Texas expected to double in the next 15 years. So wow. The point of all those is that there's not only is there a housing shortage now, but it's unless they do something to improve that, we're going to have more. We're just going to continue to have more demand for housing here in North Texas. As investors, you want to be in front of that, right? You don't want to be behind that. So my point is always the same, which is, hey, you buy when the market's strong, you buy when the market's down, you just continue to buy, because over time, there's nothing better than the long-term wealth building model that real estate gives you, right? You buy and hold properties for several years. I mean, we've seen it with our clients over the last almost 20 years, and the success that they've had just buying and holding rentals. So I think these stats just indicate, why Texas is just the best market to invest in versus anywhere else in the country.
Yeah, interesting stuff. And I'll add a little bit of fuel to the fire. If you followed any of the news lately around builders, they're pulling back. And if they're pulling back, well, that means less inventory in the next few years as well, doesn't it? To the lack of housing availability. Mike, you're kind of scaring me. Doubling. The population of Dallas-Fort Worth doubling makes me a little bit nervous here as I drive around town.
I know it's just it's just where the jobs are headed here. Other states as well, but a lot of them are headed here, and we're gonna we have a supply problem now. We're probably going to continue to have a supply problem. So the point is, I don't think you're going to see values go down, and I think some of the concern that some of the flippers are having is it's just short. Maybe it's just short term because over time the values are going to, if they don't go up, they're definitely going to remain.
I'm with
stable,
you.
In my opinion.
I'm with you. I share that opinion. And Investmark Mortgage can help by, among other things. I mean, I just got that email from you. Hey, survey results are in. I was like, awesome. This is great information. That's why I wanted to have you come on. Obviously, you do the lending for both hard money and 30-year. What's your website if folks want to go check you out?
Sure. It's investmarkmortgage.com, INVESTMARK mortgage.com.
If you have any questions for me, you can email me at askandy@lu luinc.com. Again, ask Andy at luinc.com. And a big thanks to Mike Hanna with Investmark Mortgage. He joined us, and we heard from him the results of a survey that he and his company conducted of their investor base all across Texas. We just heard they lend all across Texas, so they've got clientele and customers everywhere. Very good base, both flippers and buy and hold investors. 70% of investors are still actively looking. So if you're hearing the doom and gloom news out there, market's about to crash, at least here in Texas, the investor base does not agree. Now, flippers and buy and hold investors, there's a little bit of differentiation there, a little bit more concern on the flipper side around those values, but you heard it from Mike. Going forward, just the fundamentals here in Texas are tremendous. The lack of housing inventory is expected to continue. I mean, when you have that many people moving here per day across the state, I don't know how it can go in any other direction. Add to that, the builders are pulling back now as well with their fears. It's a good time to be a buy and hold investor. And again, to his point, you want to get ahead of that. And how do you get ahead of that? Well, it starts by becoming educated. Continue to listen to this program. Maybe take the next step. Go to lifestylesunlimited.com. By the way, if you missed any of Mike's conversation on those survey results, go to that website, lifestylesunlimited.com. This show will be archived there, and you can catch all of that. It's really good information. To my earlier point in the very start of the show, there are a lot of information sources out there, but I like to go as near to my market as I can, and it doesn't get better than that. Somebody that's been active in the market as a lender for what do you say, close to 20 years now, with a very broad base. But while you're at the website, be sure to click, if you're not familiar with Lifestyles Unlimited, be sure to click on that free workshop button. It's just an hour and a half of your time so that you can learn more about what we do and maybe get that ball rolling, so that if you think you want to buy a single family house to hold as an investment, to put a couple $100 into your pocket every month net, right? You can learn about that there. Maybe you want to do the apartment thing. We didn't get into apartments. Mike's going to be lending primarily on investment properties that are houses. But apartments, we invest in apartments as well. And 10 plus years ago, when I went to that free workshop, I had no idea that that's something that I could do. And now I am an apartment investor. I'm a passive investor. I just put my money into the investment and I wait for that Mailbox Monday. A wonderful, wonderful thing. And the fundamentals that are driving values and rents for houses, doing the same thing for apartments. We didn't get into that, but that is a true story. And you can go to our website and hear some of the other radio shows where we focus more on apartments. And I want to give you that website one more time for Mike if you're interested in learning more. It's investmarkmortgage.com. I have a lot of, to his point, I have a lot of my team that is duplicate, triplicate. I have backups for my backups when it's electricians or the AC guy, construction, but also for lenders. And I get a lot of emails. I get a lot of information from Investmark Mortgage, from a lot of the other hard money lenders that are out there. So it's a good place to go if you just want information, to my earlier point. You know that these people are connected to the source of around investing in rental real estate. These are people you want to touch base with and get on their list. You see those emailers, sure, some of it's marketing, but in this case, great information that came across my desk. And I know Mike and a lot of the other lenders out there too, they're going to do deal review for you. If you do find something that you're interested in, you think maybe you're a little bit newer, not quite sure. If you're working with a Lifestyles Unlimited Realty team member, well, they're going to do that deal review with you. If you're not, well, you want somebody by your side to help. Maybe that's Lifestyles. Again, go check us out. But if not, sit down with your hard money lender. If they have your best interest at heart, they're going to sit down with you and tell you yes or no, this is or this is not a good deal. Now, let me take a step back here. You might be scratching your head if you're catching this show for the first time or new to real estate investing. You might be thinking, well, hard money. What is that? Are you talking about actual cash in my pocket instead of the digital stuff in my bank? My son has a piggy bank that's full of coins, quarters, nickels, all that stuff. For him, that's hard stuff. He can touch it. It's tactile, right? He can count it. That's not what we mean. Hard money is a type of loan, very, very beneficial for both flippers, but very, very beneficial for me as a real estate, a rental rather, buy and hold investor. Obviously, it's financing. I don't want to put all my money into a particular house. I don't want to buy all cash. If I use financing, I have less cash in the deal. That leverage magnifies my return. So obviously, I like that financing angle. Well, why not do conventional lending, just 30-year? Well, a lot of what we're buying needs a lot of work. And due to the condition of the property, the conventional lenders cannot loan on it. They will not have the insurance offered by Fannie Mae or Freddie Mac on the back end due to that condition, so they won't touch it. So hard money will. They're going to lend on a particular investment opportunity based on the future. They're going to look forward. They're going to say, okay, it's a wreck now, but you've got a budget for, let's say, $43,000 to renovate that house. What's it going to look like when it's done? Oh, it's going to be worth $200K. Well, they're going to lend based on that amount. So you may get your purchase price as well as your renovation costs covered. You can do zero out-of-pocket deals. Now, they're not as common. They're not as common these days just with prices where they are, but that's how you get a little less money into each of those investments, by using hard money, by addressing the conditions. Sometimes the deal has to close very fast. Now, we haven't seen a lot of foreclosures lately, but a handful of years ago, maybe that house, that seller, they're headed for the foreclosure auction. You got to beat them there. And so you have to go fast. Maybe you have to close in a handful of days. Hard money lenders can do that as well. So those are just some of the benefits. But more than that, going back to what we talked about, deal analysis, they are an advisor. As Mike said, they only lend in Texas. They know this market. You know, that part of town, maybe you've bought some rental properties in the Dallas area. You're thinking about going over to Benbrook, wherever that is, part of Fort Worth. Well, that part of town that's new to you is probably not new to them. So great advisor to have on your team. And incidentally, just, like I said earlier at the start of the show, there are a lot of places to go for information. Yes, I am on Facebook. I'm in a lot of real estate groups there. Paul Starnes, he's one of the sales guys for Mike, and he's here in the Dallas area. He happened to post just yesterday, and I think this is a great case study for you. Hard money case study, showing numbers on a recent deal. Purchase price. Now, this is a low one. This is a smaller house, lower value, maybe ramshackle. Purchase price, $51,000. And I just want to give you these numbers to help you, again, get your head around how hard money can help you. $51,000 purchase price. Estimate for the rehab, I just named it, $43,000. After repair value, it is a lower value house, $125,000. I love those lower value homes for rentals. And this is a rental, so they're going to lend hard money at 75% of that expected, or that after repair value. So they're going to take $125,000, 75% of that. Loan amount is right around $94,000. So do the math. Purchase 51 plus rehab 43. He estimates closing costs around $6,000. That's $100K. They're lending you $94,000. Estimated out of pocket's right around $6,000 or $7,000 out of pocket to do this investment. So you get it fixed up, and you don't stay in the hard money because, yes, it is a higher interest rate. It is a bridge loan. It is higher risk for this lender. And when you're done with the renovations, you exit that hard money and you refinance into a 30-year loan. Now we can talk conventional lending. Now we can go to that 30-year note. And when you do the refi, you're all in at $7,000. If it's renting at, lower value like this, $1,100, $1,200 a month, lower note, you're going to be cash flowing like crazy. But that's where hard money really helps you. That out of pocket, only $7,000, you can do a lot more of those type investments over time, can't you? So that's why we use hard money. I just wanted to circle back. Mike was very gracious, talked about the survey results. We didn't really get into what they and our other hard money lenders do, and I wanted you to understand that. And a hard money lender is absolutely somebody you want on your team. Get a couple. Well, how do you build a team? Well, I did do an earlier show just a handful of weeks ago where we talked about this very topic of sourcing vendors. This was on July 15th. Again, go to our website, lifestylesunlimited.com. I think they titled it Sourcing and Vetting Vendors when they posted that there. Good place to go to learn about doing that very thing. Finding that hard money lender, asking some questions. How do I make sure they're good? Finding that tree guy, finding that general contractor, finding that insurance broker, all those people that you want on your team. And by the way, all of those people on your team, they're part of that feedback loop. Going back to the start of the show, where do you go to get your information? Well, if I want to know, to Mike's point about headwinds and cost of materials, well, we know a little bit more from that survey, but if I really want to know where things are going, lumber, right, those appliances, I'm going to go talk to my GC, my general contractor. or my framer if I'm if I'm running the project myself. I'm going to talk to those guys. If I want to know what insurance rates are expected to do later in the year or next year, I'm going to go talk to my insurance broker. I've got information at my fingertips thanks to my team. And going back one more time to Mike's point, you want to be ahead of the game. Start building that team now. Whether you're not in that 70% of investors that are actively looking now, if you're in the other 30% that are not, you can still take action. You can still move that ball forward, and you can still work on that team and be prepared. Be ready for when you do decide, hey, this is the time. I'm used to the higher interest rates now, okay? I'm used to the higher cost of goods and inflation. Great. Ready to go. So again, give that radio show a listen July 15th about building that team. Go to lifestylesunlimited.com. You can find the radio shows there. Click on the free workshop button while you're there and go to investmarkmortgage.com to learn more about what those guys do. Great source of information. I thank you for listening. And remember, it's not the money, it's the lifestyle. You have a good day.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an